First up, we have the official opening that will be done by Mr. Chombe, Chairman of RMA, followed by the industry overview presented by Mr. Tien Serfontein, MD of Prosperity Health. Then we move over to the operational overview that will be presented by RMA Principal Officer, Mrs. Esther McLeod, followed by the 2022 product highlights presented by Mr. Bertus Struwig, CEO of Prosperity Health. Last but not least, our closing remarks that will be delivered by Mrs. Rauna Kanu, RMA Board of Trustees. Ladies and gentlemen, without any further ado, I call upon Mr. Gabriel Chombe. Thank you. All vaccinated, it's fine.
Oh, okay,
Yeah.
that's fine. Thank you. Yes, fine.
Yeah.
Good morning. Director of Ceremonies, fellow trustees, esteemed members of RMA, the reason for our existence, the Principal Officer, CEO of Prosperity Group, the MD of Prosperity Health and your management team, representative of NAMFISA and NAMAF, our regulators, if they are present. Ladies and gentlemen, it is my distinct honor and pleasure to extend a warm welcome to you all at this occasion marking the official launch of our product 2022. The launch aligns with the fund's vision by demonstrating our strategic directions trajectory. Notwithstanding the current environment induced by the novel COVID-19 pandemic and the bleak outlook for the global and domestic economies, coupled with job losses and restructurings of companies, the fund takes pride in its strong leadership, efficient systems and processes, and strong financial performance. With the election of a new Board of Trustees earlier this year, the fund's governance has been strengthened through the addition of more diverse pool of skills and experience. The Board of Trustees' combined skills are carefully chosen to meet the fund's need and to work toward a common goal, ensuring that our members' health is protected. As we launch our product 2022, I want to assure you, our members and prospective members, that RMA remains a sound, reliable and trusted fund. Our slogan, "Your health comes first," is a representative of what RMA stands for. The fund values the health and well-being of its members above everything else. At RMA, we believe that health is wealth, and we make no concessions regarding the health of our members and their families. For ease of understanding, please refer to your 2022 product brochure for the summary of product benefits, and I think it's available. Today's launch marks the introduction of new and enhanced products for the upcoming benefit year. Throughout the current benefit year, we have been constantly reviewing and evaluating our product benefits and how we can improve them for the benefit of our members. As a fund, we strive to develop a range of innovative and comprehensive products with not only flexibility, but also affordability and value addition for our members. I would like to take this opportunity to express my sincere appreciation to our Principal Officer, Ms. Esther McLeod, and her team. Prosperity Health Administrator, represented by the Group CEO, Mr. Bertus Struwig, and the Managing Director, Mr. Tien Serfontein, and team for hard work in ensuring the launch succeeds. In the same light, I would like to once again extend a warm and special welcome to our regulators, NAMFISA and NAMAF representative. Your continuous support, willingness, and commitment to grace our annual product launch is always appreciated. In the same vein, and on behalf of the fellow trustees, we express our gratitude to our valued members for entrusting us with your fund. Finally, this is an opportune time for me to declare the official opening of RMA 2022 Product Launch. Ladies and gentlemen, once more, welcome, relax, and enjoy. I thank you.
Mr. Chombe, thank you very much for the warm welcome. Ladies and gentlemen, according to the second quarter industry report of NAMFISA, medical aids has incurred significant increase in claims for 2021. To give us an insight in the industry overview, I welcome Mr. Tien Serfontein. Thank you.
Good morning, everyone. Warm welcome from my side. Just before I start, just from my side as well, I mean, it's a real privilege to share with you today some industry information over the last quarter. As was said during the introductions as well, I think all of us will agree that this last year has been an unbelievably challenging year brought about by the COVID-19. Most of us have been touched on a personal level as well. And as such, the medical aid funds in the industry in Namibia has really experienced probably the most toughest times in the last 100 years as a result of COVID, the hospitalizations that it was associated with that, and the impact on the cost. And I'm just going to share with you some highlights around that. Okay. Okay. Just starting off with, just very briefly on the membership information. The industry has been quite constant, the membership figures have been quite constant over the last quarters of this year, quarter 1 and quarter 2 of 2021, and that is understandably so. I mean, the economy is under some pressure. There's not a lot of jobs being created and new employment created, so the number of members that belong to medical aid funds have stayed quite constant, and that's around about 94,000 in that first table on top. Just moving down to the second table, just one aspect I want to highlight to you is if you look at the open fund pension ratio, if you look at quarter 2 versus quarter 1, there's been a slight increase in terms of that for the pension ratio as well, and that is supported by the average age. So even in this year, during the first 2 quarters that we looked at, there's been a small aging of the population that we've got within medical aid fund industry. And that is telling us a story, and the story that is telling us is that there's no young individuals joining medical aid funds at the moment. And that speaks again to the economy and the situation that we finding ourselves in. That young individuals that should be employed, that should start belonging to a medical aid fund, we're not seeing that in the stats coming through from an industry perspective, and that doesn't bode well for the long term, because we're sitting with a population that's going to age over time, increased risk and increased cost over a period of time. Okay. The claims ratio. Basically what this graph is showing us for every Namibian dollar that you contribute to the medical aid fund, what amount is being paid out to healthcare services. And that is only to healthcare services. That excludes all the other costs associated to running a medical aid fund. Now, if I just draw your attention to the yellow sections or the yellow graph or the yellow bar at the bottom where it says open medical aid funds, and we take the information back to quarter 2 of last year already, you'll see that was standing at 88%, which is already quite high. One wouldn't want that percentage necessarily to be above 80%. That's kind of a comfortable position to be in. And you would see that stats over the quarter 2 and quarter 3 of last year, going up even the quarter 2 of last year to 97%, dipping slightly in quarter 4 of 2022, which is understandable. That's usually towards the end of the year, December, there's usually a slowdown in claims. And then right through looking again to quarter 1, 2021, up to 97%. And then the block that's marked there in red, 104%, that's a real concern. And that relates back to that terrible period that we had here, in the May-June period in Namibia, with the high outbreak of the Delta virus, leading to that huge hospitalization cost and the tough times that we had. And that brought for open medical aid funds only, the claims ratio to 104%, which means for every Namibian dollar that was contributed to medical aid funds at that point in time, $104 were paid out. And that meant one thing, that a difference, that $4 difference had to be obtained somewhere, and that was obtained from the reserves. So all medical aid funds in the industry went through extremely tough times and had to fall back on their reserves that they've accumulated over a period of time to sustain themselves during that tough period. If you look at the industry, that was even worse. If you combine the open and closed funds together, that was a claims ratio of 115% during that time. And this information, I should have mentioned, that comes from the NAFISA reports, which is our regulator, so it's official reporting around that. So what we're seeing here is testament to basically what we experienced at a personal level during this time. High hospitalization, high cost, either acute treatment, cough and cold, and medication that was used for COVID, but also the hospitalization. So it was really, we saw it through in the figures that we see from an industry perspective, very, very difficult times that we had at that point in time. Okay. If we're moving on, this graph is showing us the average contribution. That is kind of the dark blue bar that shows us the average monthly contribution per beneficiary. In other words, that's on an independent or individual level versus the actual claims that were paid out. Again, the information goes back to Q2 of last year, and on a quarterly basis, that's reported. Now, what's interesting, if you first look at the graphs, the dark blue one, that kind of stayed quite constant. So on average, per beneficiary, contributions even from last year, Q2, right up to 2021, Q2, that was around about 1,800 that you would contribute. And the reason for that is, you would remember, end of last year, the medical aid funds had very low increases throughout the industry, and that spilled through in the fact that the contributions didn't increase much. But again, the concerning factor that one looks at the average claims, again, quite constant from last year, Q2, up to that period that I've just mentioned in Q2 2021, where the average claims paid out on a per beneficiary level increased from 1,600 to 1,900. That's more than a 15% increase that we had from Q1 to Q2. And again, that speaks directly to the COVID impact and that fallout and infections that we had during the May-June period. So just to demonstrate the significant impact that COVID had on all medical aid funds and the impact that it had in terms of the claims that were paid out during that period. If you look at the average reserve level, and I just want to mention and take you back to that previous slide I had in terms of the industry that paid out 115% of contributions at that point in time. And I mentioned also that the money had to be obtained somewhere, and that would be the reserves of the fund. Again, if you just look at the industry side and you go back to Q2 again, the reserve percentage, that's the amount of money that the funds have in the kitty to pay for a rainy day. That was around about 36%. That went up end of last year, 39, 40 to up to 43%, to 41%, and then it went right down to 38% at the industry level again. And that again just explains the reason why all of us should have a medical aid fund. For these terrible times when one has to fall back, the medical aid fund leaves you that peace of mind and comfort in order to pay for medical expenses. And second of all, we always say when we do our actuarial calculations, part of that calculation, the actuaries always provide for once in 100 years there's a pandemic or there's a real significant cost increase. And that's what we had this year. It's really an extraordinary claims year within the medical insurance industry. And the reason you had a medical aid fund was to help you through that period. And we're lucky in Namibia, and you would see the reserve levels are still significantly above the 25%. So we're really lucky in Namibia that all medical aid funds, the industry is well reserved, and the industry was able to really withstand this high claims period that we had. Just looking a little bit more closer at the COVID pandemic and the costs. In terms of column A, that was for the period 1 April to 30 June, correlating to that fallout and infections period, and column B was 1 January to March, the period prior to that. So if you look at testing costs, and I'm just going to touch on the accumulated results, which is basically in the last column. So we've tested in the industry, 14 million was paid out to medical aid fund members who had COVID tests done. And one needs to understand this is not COVID test that was done for traveling. This was where there was a patient under suspicion. In other words, there was reason to believe that someone was positive and experienced symptoms. So 14 million was paid out in that respect. And then hospital cost, medical aid funds paid out over 100 million for hospital cost, of which nearly 70 million or 67 million was paid out during that Q2 period when we had that significant fallout in infections and high hospitalizations. So just again to show the real impact that COVID had on medical aid funds, paid out more than 115 million in the first 2 quarters of this year with regards to COVID for screening and the hospitalization side thereof. Okay. Just going to briefly run through some medication slides just to, we also had this last year, just share some interesting trends. Starting at the left graph up top, vitamins. We all know that that's kind of the regimen that was advised at the time for COVID and also to treat it on a prophylactic basis. So COVID and zinc and ascorbic acid, that's vitamin C. That's kind of the cocktail at the point in time that was prescribed, and we can clearly see it in the stats. This graph's timeline is from 2019 up to 2021, June, July. And you can see prior to during the 2019, not much of these medication were claimed, and then there's a significant increase from 2020 to 2021 when the COVID pandemic started. And those spikes that you would see on the graph correlates directly back to the peaks and fallouts in COVID infections. So just to again illustrate, yes, COVID had a big impact on hospitalization costs in terms of screening, but it also had a significant impact on acute and over-the-counter type medication that medical aid funds had to pay out during that period. Chloroquine was one that was advocated at some stage that had some merits as an anti-malarial drug, as we said last year. Again, it seemed towards the end that there wasn't real rational clinical reason or merits for that to be treated, but again, one can see it in the stats, the high usage of that medication coming out. The same with antibiotics, the graph to the left, right at the bottom as well. And that's usually when secondary infections started to happen as a result of COVID, one would fall back on their antibiotic use. And again, sharp increases that correlates to the periods of the fallout of the infection. I just want to stand still. The graph to your right-hand side, right-hand top, that says NOACs, that's basically just that speaks to anticoagulants. That's medication that they would treat in order to prohibit the blood from forming clots. And the interesting thing for me here is you will see that there was, during 2019, during 2020 and 2021, there was actually not much of these medications used, and we saw a sharp increase in the usage thereof during 2021. And the reason for that is as the healthcare industry started to understand COVID and the complications that it causes a little bit better. One of the major complications that was identified was that of blood clotting. Now, we all heard about someone that was had COVID in hospital, starting to get better, and then suddenly passed away. And the majority of those individuals that passed away was a result of blood clots being formed, either in the lung or in the brain, or also for causing an aneurysm. So one of the complications that was learned as a result of COVID, and the long-term complications of COVID, was that of causing blood clotting. So Xarelto, that's a medication used to keep your blood thin, if I can call it that, the usage thereof increased significantly. So again, it's a high-cost medication, and that then formed part of the normal treatment regimen for COVID patients. So that's why you saw the graph clearly shows that. Low usage of Xarelto, and then a sharp increase towards the end, and it became standard practice to give that to COVID patients, which was correct. I mean, it treats absolutely one of the complications of COVID. But again, from a cost impact, the significant increase in the cost that was put on medical aid funds with the implementation there. Then the graph right at the bottom, that was Tamiflu, basically that was used. And just again, interesting, in 2019, 2020, Tamiflu was the only medication that you can take orally that was registered at the time as an anti-flu or antiviral type medication. So when COVID happened, all the doctors and everyone started to prescribe that to see if it would work. And then again in the graph, you'll see early stages with the onset of COVID 2 years back, that was prescribed a lot, but then immediately realized it's not helping for COVID. So you'll see the tapering off, and going forward, that medication wasn't prescribed again. But again, demonstrating that impact when Tamiflu was prescribed significantly, even though there was no clinical merits or justification at the time, financial impact on the funds in the industry. Just the last slide, just touching on a little bit closer to home, in terms of the Renaissance members and the impact that COVID had on us. So in terms of hospitalizations, in terms of screening tests, we had about 4,500 of our members had COVID screening from a Q1 and Q2 perspective. In other words, until end of June of this year. So for 6 months, we've had 4,600 members screened for COVID. We had 246 members hospitalized for COVID during that period. And unfortunately, as Lydia also alluded to, 52 of the Renaissance members passed away as a result of COVID during 2021 from a year-to-date perspective. So, you know, it had a significant impact on the Renaissance as well. Okay. Ladies and gentlemen, thank you very much.
Mr. Serfontein, thank you very much for the insightful presentation. Ladies and gentlemen, in difficult times such as this, it is important as members to have the assurance that our medical aid funds are financially sound. To give us the overview on the fund performance, please join me in welcoming Mrs. Esther McLeod, RMA Principal Officer. Thank you.
Good morning, everyone. I'll stand in the protocols already established. But before I get to business, since we are in a health industry, I would like everyone to stand up, please, just for a stretch. Yes. We can do left and right, and if you can, please try to touch your feet. Try to touch your feet, if you can. Thank you very much. All right, so I will present the fund and operational overview. First is just to explain the fund structure. As you are aware, the fund is a non-profit organization that belongs to its members. So the members are actually the shareholders of the fund. And the members have entrusted the governance of the fund to the Board of Trustees. So the Board of Trustees oversee the fund and the governance thereof. The Board of Trustees then appoints the principal officer, who is the accounting officer or the chief executive of the fund. We have a relationship with Prosperity Health as the fund administrator. So what we have in place is a service level agreement, which then stipulates how the administrator should render services to the fund. The fund, the trustees also appoint actuaries who evaluates, the fund operations, the claims, the contributions, and also the auditors who audit the annual financial statements. Obviously, we are registered with NAMAF and regulated by NAMFISA. We hold annual general meetings. I think most of the members are aware that we have held successful annual general meetings in the past. We also publish annual reports, and all these reports are on the fund website. There is total transparency as far as Renaissance is concerned. We are very open to our members. We want the members to know what is happening with their funds. Our doors are also open, be it at the RMA office or Prosperity, the administrator. We encourage our members to visit our website, and we do constant communication to inform our members as to what is happening. Our trustees declare interest to NAMFISA every time we have meetings, and they have no direct or indirect relationship with any provider of the service of RMA. As you might be aware, we held elections this year. We have elections every 3 years to elect new Board of Trustees. So the current Board of Trustees is made up of 11 trustees. Some trustees are among us. Some may be watching us virtually. And I will just kindly ask as I continue, for those who are here, to please stand so that our members can see you. Our current chairman is Mr. Gabriel Chombe. I know you have seen him. He welcomed you. Thank you, Mr. Chombe. He is deputized by Mr. Benny Amwenye. I believe Mr. Benny Amwenye is at home or office. He's not with us today. We have Ms. Claudia Hoabes. Ms. Claudia Hoabes, you can stand please so that the members can see you. Thank you. Mr. David Chombe, he's probably not here today. Mr. Harold Kaune. Mr. Harold Kaune is a new face. He's a new trustee. A new trustee. Thank you very much, Mr. Kaune. We have Mr. Ivan Hayambo. Ms. Josephine Soroses. Mr. Kevin Adams. Mr. Peter Katzmeier. He might not be here with us today. Mr. Rafael Masule. Mr. Masule is also a new trustee of the fund. And lastly, Mr. Rauna Kanu. Oh, Ms. Rauna Kanu. Apologies. I think that says a lot. I think we have too many misters. So members, next time you elect trustees, I think you need to look into the gender balance. Okay, so I'll talk a bit about claims by discipline for 2021, and this is now fund specific. Tian has alluded to quite a lot of reasons as to why the claims are high. Obviously, everybody knows it's the impact of COVID, which has affected not only our fund, in fact, not only the fund industry, but the whole economy. So the largest portion of the cake goes to private hospitals. They take up 33%. I think we are all aware that hospital beds are becoming very expensive, in fact, competing with hotel rooms. I didn't say that, but that's how it is. That is followed by medical specialists with 24%. Pharmacies takes up 18% of the cake, followed up by general practitioner, 11%, and then auxiliary services, 6%, dentist, 5%, and then lastly, optometrist. The membership by product, that is now our members in terms of which options they are. We are seeing that the larger portion of membership is at Esteem Care with 25%, followed by Caliber Care, 27%. This is the opposite of last year. Last year, we had the majority of members at Caliber Care, and this year we have Esteem Care, and again, that is really explained by how a lot of members are affected by COVID. You have a lot of people who have been retrenched, you have a lot of people who have had salary cuts, so medical aid is becoming, unaffordable to many of the members, if I say that. But I think we are grateful that, instead of, completely going out, members still prioritize medical aid, even though some of them might have brought down from higher options to lower options. And then we have Evolve Care, who represent 19%, followed up by Status Care and Premier Care, who both share 7%. And then we have Premier Care Network, 5%, Prestige Care, 4%, Access Care, 2%, and Elite, 1%. I hope you know the order. If you look at Premier Care and Premier Net Care, these are our lowest options. But again, as I said, members want to be members of the medical aid, but unfortunately, affordability is becoming a challenge within the economy and challenges caused by the pandemic. If I can take you through highlights of the finance, the key areas, as I said, we annually audited by PwC, and obviously before that we have prognosis actuaries who helps the fund with quarterly evaluations, so that the trustees can make informed decisions. He advises the fund, the claims patterns, and so forth, and then helps the trustees to make a decision in terms of how to go forward, what to invest, what to keep, and so forth. And this data I'm presenting today is the year-to-date up to September 2021. So we have if you look at the surplus, that is now after interest and fair value, we have been quite okay for the past 4 years up until 2020, where we had 47.2 million. 2021, though, you can see that we have a deficit, and a huge one too, 49.2 million. Now, I don't want to repeatedly, hammer on the COVID pandemic. That's a reality. COVID has really caused havoc in the industry. You can see that even though we had 47.2 million surplus last year, I think most of the procedures, especially the elective procedures, were put on hold last year. And that then, when the situation got better, all those claims came into 2021. And this is why we are seeing this deficit from a surplus of 47 to a deficit of 49.2 million. Tian has already elaborated on the COVID costs, hospitalization, which took up 25 million, and even the COVID test alone took up 4.5 million. Accumulated surplus, even though year-to-date indicates a deficit of 49 million, the accumulated surplus is still good, and that's because the fund has really been doing well over the past years. So we are seeing a surplus of 270 million, and if you can look at the graphs, this is more or less what we had in 2019. Just a bit lower, but we are 270 million compared to 272 million. So the surplus is still, in terms of accumulated funds, we are still safe as a fund. Now the fund worth, the total worth, meaning that the fund asset, cash and investments, we are currently at 342.9 million year to date, and that is still quite a comfortable position to be in. Yes, last year, as I said, things looked well, but I think last year is a year on its own. It was quite unpredictable. It's still unpredictable. We are still sitting with uncertain times, but with a worth of 342 or 43 million, I think we are quite comfortable. We are not concerned. Contribution versus claims. This is the very first time that we are seeing such high claim ratio within RMA, sitting with 98%, which is in fact 1% over the benchmark of 97. Tian has really elaborated quite a lot of the reason as to why, you know, this contribution versus because we follow the industry. What happens in the industry also affects RMA. So 89, yes, it's not something that we would want to be, but and again, this is dictated by the situation on the ground. Claims are high. It's COVID. It's the economy that has affected our members, and we just have to live with it. But the fact of the matter is that the fund can still absorb these claims. When it comes to solvency ratio, up to date, we see a solvency ratio of 4.7 times. So even though times are bad, the solvency ratio this year is still better than last year at 4.5%. We have very few liabilities, 72 million compared to the assets of 342 million. So we can actually, you know, live or outlive our liabilities 4.7 times. So again, there we are very comfortable as a fund. Reserve level, we have definitely gone down comparatively. We have been for years experiencing very good reserve levels, more than 40%. This year we are at 37%. But again, if you compare to the benchmark of 25%, we are still quite comfortable. And the Board of Trustees are really following this thoroughly to make sure that we are at a position where during bad times, we can still take care of our members. That was actually my last slide. Thank you very much for your attention.
Thank you, Mrs. McLeod, for giving us the reassurance that our fund is financially sound despite the impact of COVID-19. With the benefit design each year, the fund considers a number of factors such as economic conditions, medical inflations, claims utilization, and of course, members' feedback. Now, all these factors were also considered in the 2022 product. To give us the highlights on our new product for next year, please welcome Mr. Bert Stroewig.
Thank you, Madam of Ceremonies. Lydia is, I think every year I need to tell you you look beautiful, and every year I need to tell you you are becoming a better and better person in charge of ceremonies. And thank you for that. Madam Pio, after your exercise, I'm pretty stiff. I was battling to get up the stairs, so I hope there's not another exercise session after this event, because people like myself and Tian will not be able to survive a workout session like that. Guests, I think today, obviously, we have to thank our members that went through us in a very, very difficult 2 years. We've probably in our lifetime, it's one of those storms that you need to weather that we will one day tell our grandchildren about. We have been blessed over and above a very terrible financial storm we've been going through. We are blessed with our Board of Trustees. I think an administrator can be as good as you want to, and we have a brilliant managing director with his team, Tian. But the Board of Trustees, your chairman, your principal officer, those are the captains of the ship. Now, our members in Walvis Bay will know, when you're in a storm, you better make sure that you have good captains. And we are blessed to have the captains that can take us through the storm and be cool-headed in saying we're going to see this through. And I think what you hear today, it is very much a credit to the parties involved in taking care of your healthcare. Today is very interesting. Every year we have these huge launches, and today we have a hybrid system. We have people in person, and we have a whole client base on streaming from their homes, from their offices, from their farms and their factories. And the reality is, after 2 years, we have changed the way we live, we do business. We've been driving Zoom meetings for 2 years. And in fact, we became specialists in that. We don't see our financial director, Marius Creer's children chasing each other with broomsticks. We don't see, naked people walking behind your screen while you're in a meeting. And I think we've all matured into this new virtual world. And it will be interesting now to see what is the balance between in-person attendance and your virtual attendance of people coming in. And the wonderful part is that even the people that is not online now will later on tonight or anytime in the next couple of days lying ahead be able to just open up this launch and watch it from the luxury of their couches or their houses. And that is how things have changed. And I think as Namibians, we always love to be conservative. We always love not to change. We were pushed into this digital revolution, and I think we are seeing that taking place. So I just think from our side, on the financial storm that we went through, we see that, I think a lot of people have been saying we've lost 2 years of our lives. If you look at the financial performance of the fund, we actually, as if we're still stuck in 2019. Because all the reserves that was built in 2020 just got wiped out in 2021. So 2 years later, we sit where we sat at in 2019 in terms of our cost. So before I start with the product, today, after today, tomorrow, and over the weekend, we'll start driving to start with our regional launches. So I think we still believe in our conservative relationships. I haven't heard anybody that's have a virtual marriage yet, although I hear there's people that's having virtual weddings. But we do believe that we need to have in-person visits and contact with our clients. So after today, on Monday, we start down south, in Ludwitz, Rospina. We have a team in Walvis Bay, Swakopmund, then Chumep, and then obviously the capital of Namibia, Oshikati Ondangwa, which is always my personal highlight, and I look forward to our roadshow. Obviously, we've been talking about the regulator, which is always the most important party that we're dealing with, and the approval structures through the regulation, and the regulator is very important, and obviously in what we offer to you today. We are not changing much of the products, and Madam Pio is touching in terms of where the bulk of our members are placed, and Esteem Care and Caliber Care, those two options actually takes or evolve, and Esteem becomes the big product drivers. You have your 1% privilege that sits on the prestige care. We have a growing member base on primary care and primary care network in terms of affordability, because our principal officers mentioned that. Affordability will become a huge important component going forward, because with the impact of the pandemic, the long COVID, the inflation on healthcare, which is running away, we will have to look at different ways in making healthcare more affordable. You know, I've been in the industry for 30 years. It is the first time in my life this year that I saw hospital accounts exceeding 3 million Namibian dollar. I never thought it would be possible. So, and if we look at the 52 members that died this year, we are in a new territory that when you have cover, you need to make sure that your cover is strong enough. I think our products has been created over many years, very strong reserve backing, and we're sitting in a situation that you are currently covered by one of the leading, if not the leading, medical aid fund in this country. We've spent a lot of time, and if you look at the journey of Renaissance, or journey of RMA, it's been come for more than 20 years. The old days, we had to cover hospitalization, and then we had to cover your day-to-day expenses, and those were the days that was medical aid. Over the years, the medical aid and RMAs evolved in a future generation healthcare coverage system. Today, we have complementary benefits. You have your benefit builders, where you can now have rewards for wellness. And then the most exciting thing for next year is what we do with the benefit wallet, because I think we are also moving, and that is one of the great things and the credit I gave to our Board of Trustees. Although we've moved into a virtual meetings and the creativity that has been generated over the last 2 years. Now you can only test your partner when the stakes are down. That old song, when the going gets tough, the tough gets going. And I think that is what we saw with our board over the last 2 years in terms of rethinkings, innovation, the rebranding of RMA, and then also the whole benefit wallet structure where we're taking it from next year going forward. That will revolutionize healthcare as we know it in this country. Something we're adding for next year is what we call the base benefit. And the base benefit that we are bringing in will be a central benefit that we'll put in your wallet. And I will touch on that because that is the area that I believe that will change a lot of things that we know of medical aid going forward. What we're doing next year is, and again, the board needs to be conservative. You saw about the losses of 49 million Namibian dollar year to date. It might go down slightly towards December, but I think we can comfortably say that there will be a loss position of 40 million plus for this financial year. So the board obviously need to now balance and say, what is the premium increase going to be? Are we going to have a 2022 year the same as 2021? So we have to be conservative, but at the same time, the board needs to say, where's the scheme going? And with the new base benefit builder of $480 that we put in your central account, that will open up a new concept, because all your shortfalls, and if we look at some members never claim, but if they go to a pharmacy to receive their script, medication, prescribed medication, they pay 20% co-payment. Now, some members will say, but I don't have the 20% co-payment. Now, what will happen from 1 January is that co-payment will automatically go out of the $480. So we're going to start automating the processing of your shortfalls in the 480, and every year I do believe this balance will start growing over and above the other accumulated benefits. Our Madam Pio has mentioned the power of women on the board. If you look at Madam Rona and Gloria and everybody, yes, I think we and our chairman, he's not as old as me, but we have realized that we are in a women's world, that we as men has become, luckily not servants, but our women has become those new drivers in the new thinking. And I think some of the rules you see today, I remember for many years and been around for many years, our industry has been dominated by men for too long. Now, and you'll see the new rule changes coming in, women are taking over, Mr. Chair, and we welcome it, because now we as men can sit back and we can enjoy the fruits of life. So next year, the IUCD devices, your marinas, those procedures will get its own designated benefit of $6,800. In the past, those benefits were covered under your normal medical benefits. But our female members, our board of trustees said, no. Those days are gone that women are just put into a pot and say, you need to cover yourself. We want focused benefits. And this is a major, it's part of that modernization that we say, let's start structure the product around the needs of our members, of all, the old, the young, the healthy, the sick, male and female. And I think that is where what we go doing in terms of modernization and our focus. Out of COVID, and I think we all realize that COVID is not going to disappear. COVID had a huge impact, and Tian shared with us the cost of medicine and the type of medicine. And what we find is that COVID is basically very easily using all your medicine levels and all your medicine benefits for the year. So we create a COVID medicine benefit block of $5,000 per family. It is not high expensive medication going through it, but it will have an impact on your normal medicine benefits going forward. So the $5,000 gives you that extra to cover all medicine that is COVID, needed for COVID treatments. Our OTC medicine, the multivitamins, the tonics, those are all things that we are bringing in. And I see there's some members very excited about it. We're going to cover it. I see some men smiling because we are bringing in our cover for male contraceptives. Now, that is very important because, the condom factory in Namibia, Smile, has closed down.
So ladies, when you saw men walking around without smiles, was because Smile closed down. But we are putting the smile back on the face of our men. So you can smile. Marius, you can do family planning again. Children are expensive. So we will cover male contraceptives then going forward under your over-the-counter benefit. The extended benefit, and one of the things of Renaissance, we probably have the best medicine benefit layers in this industry. And with the extended benefit that was launched a year ago, we basically created an environment where you say that sick people cannot really run out of benefits. But what we found is that we have a large percentage of diabetic members. And when those medicine goes through your chronic medicine, it can deplete your chronic component. So for next year, we are moving diabetic and cardiac condition medicine directly into your extended benefits. Now, our diabetic members has been probably the most affected by the coronavirus. And I think with our managed care program on diabetic patients, our additional benefits where your diabetic treatments, test and medicine will go out of your extended medicine benefit, that gives that environment where our diabetic members can enjoy huge benefits without having the risk of benefits depleting. Our wellness benefits next year, as part of where we're moving, and Tian were mentioning that we don't see the young people moving in. We don't see young members. Now, for people like myself, it is a concern because medical aid is a cradle-to-grave coverage. But as we grow old, we need young people coming into the system. Because if you don't get young people, by the time we're all old, there's going to be nothing left. Because in the last 10 years of your life, you claim more than your whole lifetime together. So we need young people to come in to finance me the day that I'm 80, 90 or 100 years old. Now, moving into a rewarding system with our wellness rewards, next year we'll start developing and creating a lifestyle rewards where our members that participate in fitness events can earn benefits that goes into their wallets. So, and I think that is a program. By end of next year, we probably will have a much more formal structure. So we'll go through a cycle, a bit of experimenting, a bit of testing, but eventually our members will join, the young members joining RMA, don't join it because they might not get, or they get sick. Because a lot of young members say, I don't want to join because I never get sick. But now you can join because you earn benefits. You grow your benefit portfolio so that the day that you're 80 years old, you sit with a huge benefit wallet over and above your standard medical benefits. Then one of the things we'll do for next year is we're going to give a reward for you going for your COVID-19 vaccine. And I know there's different views on the vaccine, and we're not going to take one view or the other, but we are going to say that if you take your vaccination, and you're probably going to do your booster shot after that, after 6 months, we will pay you a reward into your benefit wallet. We have seen the impact of COVID on healthcare costs. You have seen that your medical aid has made a near 50 million loss this year because of COVID. And therefore, it is important that we do promote the vaccination and that we do reward our members if they go for the vaccine. I have no doubt. And some politicians will say, I don't believe in vaccination, those on the right-hand side, extreme right. And some politicians will say, you have to do it, you don't have a say. Life is about choices. But there's certain choices you cannot gamble. You cannot gamble with your own life, and you cannot gamble with the lives of your family. I do believe that more and more insurers in the future will start penalizing you in benefits if you are not vaccinated. That will happen. I'm not going to tell you you need to be vaccinated. I will just tell you that if you're in a hospital with COVID and you didn't do the vaccination, you might be penalized. So, and I think it's a carrot and stick. That is what life is all about. And that is probably will happen in the future as we go forward dealing with COVID, which will be with us forever. This is a rule that I think, especially when I do Ludwitz and Rospina next week, the rule of children that needs to be kicked out of your medical aid at 21. Now, I know that people are not happy with that. And every year we had a battle with members saying, you know, my child is turning 22, but he's still living in my house. He's still not working. What must I do? And the rules didn't allow us to keep the children older than 21 on. We could only keep those children on if they're studying. And then our client members would say, but you know, you are discriminating against me because I don't have money to send my child to go and study so he can stay on my medical aid. He stays in my house. And I think that is the reality we're seeing, that our children will stay longer in our homes. We will take more and longer responsibility for our children, and we already do it. So the Board of Trustees, and again, this was driven by the mothers on our board. The mothers stand up and say, we have to change our rules. So our ladies trustees driven this, and this has been coming from, it was a couple of months that it was put on the table, discussed, and then I must say a majority support, the board decided to change the rule from 21 to 25. So regardless of what your child is doing, your child can stay on your medical aid up till the age of 25. And I think with that, we give you time, your child time to find employment, start a career, but we also create loyalty because the chance is good that that child, the day he starts working, he will join RMA as a member. And I think that is the modernization that we're going through. Our benefit levels on hospitalization, elite care, prestige care, and status care, which doesn't have a ceiling. Our caliber care at 3 million, 2 million per beneficiary, and then obviously, as you go into the lower options, the benefits are lower. This is a very important component, and as I say, it's the first time in my life this year that I saw hospital accounts exceeding 3 million Namibian dollar. We've covered that. We've also brought in our GP and our psychology teleconsultations. We are busy with a project and busy testing it in-house to roll out the teleconsultations technology for next year for our members. And your counseling will become a very important part. I can see it even in our organization. After 2 years, you know, we didn't have a break. Since COVID came in March of 2019, none of us had a break. I can see how people are on the edge. The nicest people is on the edge because this has been a long 2 years. And our planning in terms of our counseling lines and our counselors that we are bringing on board will play a substantial role going forward because we need that. We need to be able to talk to somebody when we're stressed. That helps us, and to advise us, and to counsel us, and to help us. On the wellness management benefit, and I think our members have been earning a lot of points already on the pharmacy initiatives, the bionetic initiative, the nursing and the management of chronic diseases. One of the things that we are going to focus very strongly next year is on the nurses initiative. There's a huge, with Corona, when our hospitals were full, our loved ones had to stay at home with their COVID because there was no beds. And we saw what happened. A lot of the deaths we had could have been prevented. And I do believe going forward we'll have to develop our programs around home care, home-based support. We need to think about that. Not only for us getting old and that will retire at home, but also this type of pandemic, if we had systems in place of home caring and home nursing, we probably could have saved a lot of Namibians during this pandemic. And our initiative, we will very much forward working with our partners to create a stronger nursing home care system, because that is where we're going. We will never have enough hospital beds to deal with a pandemic. So we need to create a system where we can take care of you in your own bed. That is what we focus on for next year. Our premium protection program is an old rule, and I'm putting it on because we are still the only medical aid fund that gives your family a 3-month free cover in the event of your death. And we've seen that now. This year, where we had a huge amount of deaths, it was very important that those families can continue with their medical cover while they're sorting out the emotional challenges, the financial challenges, and everything coming with that. Then our long-standing membership award for our members 65 plus, and we have many members enjoying that benefit because they've been with RMA for longer than 20 years. The Benefit Builder program that I will just touch on again is on all the options, but it is not in the Evolve Care, Premier Care and Premier Care Network options. The Benefit Builders remains the same, and we see that every year our members buys extra benefits. It's like a self-financing plan. You get credit benefits in advance, 12 months of what you're paying, and then what you don't use goes into your wallet. So that program will continue, and it's wild years. I think we have more than 1,000 members that every year takes out the Benefit Builder. In fact, for next year, and I think that will be good news to our members that make use of Benefit Builders, we are not going to cancel your Benefit Builder end of the year and then force you to take out a new one next year. Those members that got Benefit Builders, it will be rolled over and you will continue with it. So you don't need to come back, fill in new forms and apply again and register your Benefit Builders. It will become now part of your profile. You decide when you take it out and you decide when you cancel it. This picture is a very important picture, and that is that benefit wallet. I do believe as we go forward, the benefit wallet will become the center of your healthcare portfolio. We created the benefit wallet, and we said if you have benefit builders, you can use it to pay for extra benefits, and if you don't use it, 80% goes to your wallet. Then we brought in the low claim rewards, and our members accumulate around about 4 million a year on low claim rewards into their benefit wallet. Then we brought out the wellness reward, which gives us around about 1 million in rewards going into member wallets. And then next year we'll bring out the lifestyle rewards. So it means that if I attend a marathon or a family walk, then I will earn points. And then, as I mentioned, the top end where we have that base benefit. So it means that every member will have an opening balance of 480. So what we are doing now, we are making sure that the whole system is tying in towards your wallet. And over a period of time, you now start accumulating your wallet. So when you use benefits from your dentistry, and there's a tariff difference, the tariff difference will go out of your wallet. If you go for buy medicine and there's a co-payment, the co-payment will go out of your wallet. So you start creating a portfolio where your healthcare can be 100% financed. You cannot do it within the structured rules because we cannot have unlimited benefits at all costs. So the wallet becomes that part that you as member can say, some years I have a good year, so I can grow my benefits, and some years I have a bad year, so I can use my wallet as a coverage over and above my standard benefits. Your benefit wallet, and I do believe, Madam of Ceremonies, in my lifetime, or maybe sooner before I'm old, we're probably going to move into an environment where mobile payments will be made out of your wallet. I see within the next 5 years that our members will go to a doctor, the doctor will charge, and the member will pay out of his cell phone, out of his benefit wallet, the doctor immediately. And maybe get a discount reward back into my wallet. Because what we see in the world, and Africa is leading the tech revolution and the mobile banking revolution, that the mobile platform gives us an environment of immediate transaction, of rewarding, of paying. And I believe that with the benefit wallet and the opening balance that we're now putting in, we tie the whole portfolio, that soon from now, our members will basically be able to bargain with a doctor and say, listen, I can pay you now out of my wallet, but I want a 10% discount or a 20% discount. Those are the things that's reality. And I think what we are doing now with RMA, we're setting it up for the future of tech and Mobi app payments, which is very exciting in terms of how I see we are doing business in the years to come. Now, we're talking about the benefit wallet. In 2018-2019, when we started the first time with the benefit builders and the wallet concept, 2018 to 2019, we carried over 9.7 million. In 2019 to 2020, there was a rollover of 15 million. So that was really a 6 million increase. And then from 2020 to 2021, our opening balance of our wallet, those will say the benefits that is belonging to members in their wallets, is 22 million. Next year, we'll probably go in excess of 25 million, closer to 30 million. So what we're seeing now with the whole concept of the wallet, if you don't use it, you don't lose it. You start building your own personal portfolio within your medical aid. Being an old dog in this industry, Madam Sormanis, I know that we are the only ones applying this innovation. And I'm not just talking about Namibia. I even including South Africa in terms of our lead thinking of innovation to give ownership to the member and to reward good health. The rewarding that our members get at this point of time, and what is great within your family, is your husband can be a high claimer this year, and maybe you're not a high claimer, and you still will get rewards because you were the low claimer, or your child was a low claimer. So for the first 5, the principal member with 5 dependents, each one of them can get a reward because they didn't claim this year. And that rewards go into the wallet. And it's that wallet that stands now at 22 million. So if I take myself, I'm on Caliber Care, On a main member, my reward is I should claim less than 3,800. No, I claim more than 3,800. But my child claimed less than 1,400 because he was not sick at all. And that balance up to the 1,400, that is the amount that goes into your wallet. So next year, I want to buy glasses. My optical benefit is not enough. I want to have a fancy frame. I can use benefits out of my wallet to pay for my fancy frame. So it becomes basically now in your hands to manage it. We are still the only medical aid in this industry that publish our group rates. We do know that in the future the regulator might want to stop that in terms of a financing model based on group size or the amount of employees you have, the total employees you have on the medical aid. I do understand the thinking of the regulator because medical aid is about cross-subsidizing, the young financing the old, the healthy financing the sick. But we also know, and that is why we have the group rate system, is that your larger company, because that company's got a bigger subsidization within his employee pool, on average is lower claimers than an individual member. So we still apply then for next year that companies that's got more than 250 employees actually gets a 15% discount from the standard rate. A company between 50 and 49 employees or members will get a 10% discount on the standard table. And this rating system will be maintained until the regulator makes a final decision, and even that will take a period of time for implementation if that needs to be changed. And then obviously the most important part for this morning is now, of all these things, how much will it cost us? We heard that the fund made close to a 50 million loss for this year. We know that the future is still unknown. And what is the increase we're taking to finance everything? Because as Tiaan has mentioned, we've basically spent this year more than the premium that came in. So our members got more benefits than what they paid for. In 2020, we had an average increase of 8.78%. Last year, we only took an increase of 4.53%. And last year we took a very low increase because if you remember, last year the fund made that 47 million reserves. So we kept it very low. This year is a different ballgame. We are making close to a 50 million loss. And based on that, the Board of Trustees have decided to only go in for a 6.5% increase. Now, to be honest, it should have been more than that. But the board, in view of the economical situation, in view that our members are under financial pressure, the board has said, no. We cannot just give the whole high increase on our members and they must just finance it. We rather will finance a part out of reserves. And this $480 that goes now into your wallet as your opening balance for 1 January, that is benefits that you actually is paid out of the reserves of the fund. Because as you saw, our reserves is well above the 25, and the Board of Trustees decided in tough times, let's give back to our members. So, Madam Ceremonies, the increase of 6.5%, very much close, that is where the industry will do. You could have a 0.5 or less than 5 differences between the different players. But with the 6.5% increase for next year, we feel comfortable that we will be able to go into 2022 regardless of what happens. There's a lot of saying about a 4th wave coming. We see that it's already now Europe is becoming affected. now in their winter cycle with a corona wave. We saw that the death and the hospitalizations down because of their high vaccination figures. So, and we all expect, some of the clever people say that we are due for a fourth wave now in December. We all say, please, just wait for January, that we at least can have one normal December before the virus locks us up again in our houses. So, but we will get another wave. It will have a financial impact because in Namibia, I think we're sitting at 12% vaccination of our population, and we still need to push those numbers, and we still need to get our members to go out and get the vaccination. So if we get another wave, a fourth wave, a fifth wave, a sixth wave, it will cost money. That's why I think with the 6.5%, the board is conservative, but at the same time, also keeping in mind that you are also under financial pressure and you cannot be taxed and billed unnecessarily for the current situation. So, Madam Ceremonies, Mr. Chairman, Board of Trustees, Madam PO, I want to use this to thank you for this year. It is great working with you in partnership. I think at my age it's a privilege to have wonderful people running this ship. And I want to congratulate you all. For this last 2 years, this was a storm of a lifetime, and you have managed it well. Thank you very much. Lydia, while you come in, afterwards, this is the new booklet. You'll see that a lot of prosperity and renaissance faces are on it. It is not true that we employ people on their looks. The fact that they're good looking has nothing to do with the fact that they are brilliant at their work also. But what we've done, Mr. Chairman, before we talk about money and increases for next year, what we've done, we've decided if we can use our own models, we save money for the fund. So that is why we're using our own people. Thank you very much.
Thank you very much, Mr. Struwig, for those exciting highlights. Ladies and gentlemen, looking at the 2022 product, it is evident RMA values member feedback. The product is innovative, it's competitive, and it speaks to members' needs. It's definitely a clear representation of our membership. Before I call Mrs. Kanu to give us the closing remarks, please let us give a round of applause to our Board of Trustee Principal Officer for a job well done. Thank you very much. Mrs. Kanu, please come and give us the closing remarks.
Good morning, everyone. Thank you for the opportunity to deliver the vote of thanks. Director of the program, allow me to stand by the protocol established. Dear all, one wise woman once said, pandemics magnify our worst traits, inequality, injustice, and fear. But they all also highlight our best traits: ingenuity, resilience, and courage. Ladies and gentlemen, with RMA vision, your health comes first. I'm confident that we will win this fight together. We are happy to have been taking this journey together as a family and continue to do so as we provide exceptional medical aid services to you. May the next benefit year continue to be a year of collaborative efforts. On behalf of Board of Trustees, I would like to extend our sincere gratitude to everyone who has been involved in this event. To the Principal Officer and your team, as well as the MD of Prosperity Group and your team, thank you for your guidance, continued support, hard work, and dedication to ensure that the event takes place. To my chairman and fellow trustees, thank you for ensuring that the fund is prudently managed, steered in the right direction, and beneficial to the nation. To all our stakeholders, thank you for believing in what we do. In closing, to our esteemed members, thank you for entrusting the Board of Trustees with the oversight responsibility of your fund. Similarly, your continued loyalty and support to the fund is highly appreciated. As trustees, we will continue to ensure that RMA remains a fund-centric fund, a member-centric fund, sorry about that, whose primary focus is the wellness of its members. Therefore, I want to reiterate our tagline of "Your health comes first," while providing you with a competitive and comprehensive product, as well as high standards of customer service. We appreciate our members' feedback and input in ensuring that the fund remains stable, competitive, and beneficial to all. Thank you, fellow trustees, for your commitment and unfailing support as we continue to work together to ensure that our members' health comes first. Once again, on behalf of the Board of Trustees, I wish you a fruitful day, happiest of holidays ahead, good health in the new year, and a brighter tomorrow. Make sure you stay safe, and please wear your mask. I thank you.
Ladies and gentlemen, we've come to the end of our program, but I just want to inform you that our sales team is available if you have any questions on the new product. Can I please have the sales team just stand up so that the members can see them? So if you have any queries or any questions on the new product, they will handle them gladly. Thank you very much.